Okay, picture this. You wake up, you check the markets, and you just see a sea of red. But we're not talking about just any bad day. We're talking about a historic, record-breaking plunge, a financial earthquake that sent shockwaves all around the world. So let's get into it. We're going to unpack exactly what just happened to the Asian markets and, more importantly, why it matters to all of us.
Right. Look at that number. Just let it sink in for a second. Negative 12.1%. For a major national stock index to drop that much in a single day, I mean, that's not a dip. That is an absolute free fall. And that is precisely what happened to South Korea's main index, the Kospi.
And the headlines, well, they didn't pull any punches. This one really captures the whole story in a nutshell. It tells you two critical things right off the bat. First, the incredible scale of this drop, and second, the prime suspect, a flaring conflict all the way over in the Middle East. This was the spark that set the whole thing off.
So how in the world did we get here? I mean, to really understand the shock of this plunge, you gotta rewind a little bit and see just how high the market had been flying right before it all came crashing down.
This right here shows you the insane whiplash that investors must have felt. The South Korean market had been on an absolute tear, soaring more than 75% just the year before, mostly because of huge demand for semiconductors. It was hitting new highs all the time. And then, poof, in a single day, a massive chunk of all those gains just vanished. Talk about a 180.
So what on earth could trigger such a massive, dramatic sell-off? Well, it turns out the initial spark was lit thousands and thousands of miles away.
And here it is. The trigger was a threat from an Iranian Revolutionary Guard commander to shut down the Strait of Hormuz. Now, why is that such a big deal? Well, this little stretch of water is one of the most critical choke points for the entire global oil supply. Any threat of disruption there sends immediate panic through the energy markets. And you can see the effect right here. It was instant. As soon as that news hit, oil prices just surged. Brent crude, which is the international benchmark, jumped over 3%. Investors basically started freaking out, pricing in the risk of a major supply shock. And that fear, it started to spread.
But hold on, that brings up a really important question, right? If this was a global event, why did South Korea's market fall by over 12% when other markets fell way, way less? Well, it turns out the Kospi has a couple of unique vulnerabilities that made it the perfect target. So the first big reason is a term you might hear called market concentration. Now, I know it sounds like a bunch of financial jargon, but the idea is actually super simple. It just means that the entire market index is basically propped up by just a few gigantic companies. And for the Kospi, this concentration is, well, it's extreme. And this is the crucial point right here. Get this, just two companies, the memory chip giants Samsung and SK Hynix, make up nearly half of the entire Kospi index. It's the classic all your eggs in one basket problem. So when those two stocks plunged by about 10 and 12%, they just dragged the whole market down with them. And the second vulnerability, it's the country's huge dependence on oil. You see, South Korea is a massive oil importer, and its whole economy is built on manufacturing and exports. So when the cost of energy suddenly spikes, it's a direct threat to the bottom line of its biggest and most important industries. That's a serious double whammy for investor confidence. Now, this wasn't just a local story, not by a long shot. While South Korea was clearly the epicenter of this earthquake, the fear didn't stop at its borders. No, this panic spread like wildfire across international markets. You can literally see the domino effect right here. The shockwave slammed into Japan, pushing the Nikkei down over 3.5%. It ripped through Hong Kong and Australia, and it even made its way to the US markets. It was a classic risk-off day. One of those moments of pure instinct where investors everywhere decide to just sell first and ask questions later. So when investors go risk-off, where does all that money go? Well, it floods into what we call safe havens. So as stocks were getting dumped left and right, we saw prices for precious metals like gold and silver jump up pretty significantly. It's a textbook reaction. When there's uncertainty, investors run for cover. All right, so after a day like that, the biggest question on absolutely everyone's mind is, was this the start of some new major crisis, or was it just a really sharp, really painful correction? Let's take a look at what the analysts are saying. Okay, here's a really key perspective from a global market strategist. The main argument here is that this wasn't about the fundamentals of the economy suddenly falling apart. Instead, it was more of a reaction to fear, and it was made so much worse by the fact that the market had run up so high so fast. Investors were pretty much just looking for any excuse to take some profits off the table. So, if we boil it all down, the expert diagnosis is pretty much this. First, you had geopolitical fear colliding with a market that was already way overdue for a sell-off, creating a perfect storm. Second, South Korea's very specific weaknesses, that concentrated index and its oil dependency, turned what was a storm into an absolute hurricane. And third, the key to getting back to normal is for things to just calm down in the energy markets. And that leaves us with the million-dollar question, or I guess in this case, the trillion-dollar question. This whole event was a huge, stark reminder of just how interconnected our world is and how fast fear can completely overwhelm fundamentals. So was this just a one-off shock? Or was it a warning shot for what's ahead? The only thing we know for sure is that everyone is watching much, much more closely now.